I'm Lee Spotter at The Deal. Here with me to discuss the future of fintech in London is Philip Whitchelo from Intralinks. Welcome.
Thanks, Lisa.
What makes the UK such an attractive hub for tech and fintech startups and more mature companies?
Yes, thanks. Great question. So I've just finished moderating a panel this afternoon at The Deal's UK economy event, looking at what are the opportunities and challenges for fintech and tech companies, post Brexit. I mean, my panelists really highlighted three sort of key ingredients, if you like, that are responsible for the success of the UK as a hub for both sort of tech startup companies, but also more mature companies. The first is, London is where the money is. So London is the sort of global financial capital of the world. It's where the majority of the money is based. That's invested in those companies, both in terms of venture capital funds and other types of investors. The second is that London is a fantastic place for drawing in talent, so human capital as well as financial capital. So London is a great place if you want to set up a business because you can have access to talent and sort of human talent from around the world, but also from the European Union. The sort of freedom of movement of people that are able to come to London and join those startup companies is a very important reason. The third is the fact that London is a great place if you want to do business outside of the UK as well as within the UK. Obviously, the UK is a big market, but it has access to a much bigger market, which is called the European Union, and also obviously beyond the European Union as well. So the ability to be based in London while at the same time selling products and services in a friction-free manner throughout the rest of the EU and the world is a very important consideration for companies who wish to sort of set up business here.
So how will the Brexit decision affect this?
Yeah, I mean, that's a great question. I mean, I guess the fears of some of the members of the panel was, the ability of Brexit to affect one or more of those factors, whether it's access to capital, whether it's being able to draw on the right, right level of talent, the right people from across the world to work in those businesses, but also, some fear about, how will companies based in the UK continue to be able to do friction-free business with the rest of Europe. But I think, despite the, maybe the challenges, because of the uncertainty around what the eventual shape of a Brexit deal will look like, I think most of the members of the panel thought that companies and investors would adapt to the changing conditions. They would be flexible enough to be able to adapt to whatever conditions, resulted after we do eventually leave the European Union.
And what kind of activity are you seeing in terms of M&A deals so far this year?
Yes, I mean, Intralinks, for those of you who may not know what we do, is we're the world's largest provider of virtual data rooms for M&A transactions. So we see deals in the very early stages of the deal, typically in the preparation or due diligence stage of the deal, which is about 6 months before the deals are announced. And we generally work on the sell side. So our clients are companies and private equity firms selling assets across the world. So what we've seen really, the latest data that we're seeing in terms of these early stage deals is that it's really a sort of a story of a two-tier Europe. So in continental Europe, we're seeing very strong levels of activity in the core Eurozone countries, France, Germany, Spain, Italy, double-digit growth rates in new deals being started in continental Europe. In the UK, by contrast, we're seeing real sort of stalling of activity. So we saw a slight decline in activity in the most recent quarter. We saw the same sort of decline in activity occurring in Q2 of last year in the run-up to the UK's EU membership referendum. So we've seen really a sort of a decoupling, if you like, in terms of the UK's ability to generate growth from the rest of Europe. And that is primarily, we're putting that down to the uncertainty around the sort of Brexit decision. And I think deal makers are being a little bit more cautious in terms of investing into the UK compared to their deal-making activity in the rest of Europe.
And this year's data, is that not consistent with previous years then? Was the UK usually the leader?
So sort of, prior to 2016, the UK was sort of growing pretty much, along the same rate of growth as the rest of Europe. But we have seen, like I say, we've seen this decoupling happening in 2016, quite a lot of volatility in 2016 in terms of the quarter-to-quarter data, and definitely, a slower rate of growth or even negative or flat growth in the UK compared to those core sort of European Eurozone countries.
Thank you very much.
Thank you very much.